The concept of time value of money in Islamic finance. According to the Islamic Fiqh Academy of OIC and Shariah boards of all Islamic banks, once a sale is mutually agreed, any addition to its price due to delay is prohibited. This is because one commodity once sold, even on credit, belongs to the purchaser, so the seller has no right to reprice it. Any addition in its price is riba. The increase in price of commodity in the original transaction is because of deferred payment, which is a valid sale, as it could be seen in Murabaha. Similarly, salam as a forward contract enables payment in advance for future delivery of the goods, which is genuinely less than the cash and carry price. So we may conclude that time value of money is acceptable in respect of the pricing of assets and their usufruct. Interest is prohibited due to being an increase over any loan or debt, and Murabaha is subject to fulfillment of Sharia rules and conditions. However, the markup technique should not be used as a backdoor for allowing interest. Settlement of debts and currency rate fluctuation. According to Islamic Sharia, when financial contribution takes the form of a loan or a debt, it is to be paid back exactly in the same kind and quantity, irrespective of any change in the value of currency or price of commodity lent or borrowed. This principle is applicable on loans, debts, credit, barter, deferred exchange of currency, indemnity, change in the unit of currency, and delayed payment of remuneration after devaluation or revaluation. However, if currency of the debt becomes extinct or not available, its counter value will be paid and the rate of due date will be applicable. Introduction to paper money. Paper money is a need of era and required for exchange and payments, and not for themselves. Accordingly, the present flat money as currency notes represents monetary value for making payments, and creditors are obliged to accept them for recovery of debts. Paper money in Islamic finance. Money in itself is not considered as actual capital in Islamic finance. It takes the form of capital only when it's used into productive activities and other resources bestowed by Allah and benefits are passed on to the society. According to the Fiqh Academy of the OIC, paper money is real money, possessing all characteristics of value and subject to Sharia rules governing gold and silver. It was concluded that notes of any particular currency can be exchanged equal for equal, and currency notes of different countries are considered monetary units of different species, and therefore they can be exchanged without the condition of equality. How Sharia compares money with commodity. Sharia has treated money differently from commodities, especially on two scores. Number one, unlike other commodities, money is not held to be the subject matter of trade. Its use is restricted to act as a medium of exchange and measure. Number two, if money has to be exchanged for money or it is borrowed, payment on both sides must be equal, so it's not used for trade in money itself. The Islamic perspective for the creation of money. The whole discussion on creation of money is based on two tiers: the Mudaba or shirka system for mobilization and the use of the resources. The relationship of an Islamic bank with its clients is that of a partner, investor, or trader, and not of a creditor or debtor. So, in the Islamic banking system, the money supply is always equal to the creation of assets, as it's not the credit given to borrowers. The following was concluded in the 5th session of the OIC Fiqh Academy. It is significant that a fixed debt is repaid in its own currency and not by its countervalue, because debts are settled in the same currency. Thus, it is not permitted to attach fixed debts, whatever their source, to currency fluctuation. OIC Fiqh Academy's rule. The Academy in its 8th session approved the following. The creditor and debtor may agree on the day of settlement, but not before, to the settlement of the debt in a currency other than the one specified for the debt, provided the rate of exchange applied is that applicable on the settlement date. Similarly, for debts due in installments in a specific currency, the parties may agree on the day of the settlement of any installment to have it effected in full in a different currency, at the prevailing rate of exchange on the day of the settlement. A conditional requirement in all cases is that no part of the amount subject of the currency exchange should remain outstanding, as required under Shariah rules of exchange of currencies. The two parties to the contract may, at the same time of contracting, agree to the settlement of the deferred cost or salary in a specific currency to be settled in single payment or in installments in a variety of currencies, or against a given amount of gold the settlement may also be made. A debt contracted in a specific currency should not be recorded against the debtor in its counter value in gold or other currencies. This is because such a practice would make it compulsory to the debtor to settle the debt in gold or the other currency as agreed upon for the settlement. Bullion trade and delivery in exchange of currencies. Gold or silver are treated as price, according to Shariah rules regarding exchange of monetary values. If an article, that is gold or silver, is sold for an article of the same kind, there must be simultaneous delivery, and they must be equal in weight, doesn't matter if they are in the shape of coins or ornaments. If gold is sold for silver or the reverse, Islamic law does not require equality in the bargain, but the delivery must be at the time of transaction. The OIC FEC Academy's rule. In the 9th and 11th session of the OIC FEC Academy, the following matters regarding crediting of money in the bank account were resolved. When an Islamic bank debits money in one account and credits it to another account in another currency, it is necessary for a bank to follow the contract of sarf. If such crediting takes some time and the beneficiary is not able to draw the amount during this time, it is allowed as long as it does not exceed the usual period. It is not permissible in Shariah to sell currencies by deferred sale, and it is not permissible still to fix a date for exchanging them.